Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Monday, January 27th, 2025. This is Nelson John. Let's get started. U.S. President Donald Trump's Make in America initiative aims to revitalize American manufacturing by encouraging companies to establish operations in the U.S. or face higher tariffs on exports. Trump proposes incentives like a low 15% corporate tax rate for domestic manufacturing. Now, this move challenges the existing global manufacturing hubs in Asia like China and Vietnam, known for the low cost and extensive supply chains. The impact of Trump's policy could be significant as it encourages high-tech and sophisticated manufacturing to return to the U.S. For India, this is a wake-up call to enhance its manufacturing competitiveness. Key issues include outdated technology, high logistics costs, and regulatory complexities. Despite the government's efforts through policies like the Productivity-Linked Incentive Scheme, progress is slow. India's investments in R&D is also minimal compared to that of global standards, affecting innovation. Shelley Singh writes about how Trump's Make in America approach will affect India. Indian-American businessman Digvijay Danny Gaekwad's bid to acquire a significant stake in Religare Enterprises for 5,000 crore rupees might hit a regulatory snag. Anirudh Lashkar reports that Gaekwad's offer, priced at rupees 275 per share, is more competitive than the Burman family's offer of 235 rupees per share, but could violate SEBI's takeover norms due to its timing and the size of the stake sought. SEBI's rules also require a counter-offer to involve more shares than initial bid. Moreover, there are concerns about the conditions attached to Gaekwad's offer and the clarity around his funding sources. The battle for control is really about Religare's profitable health insurance arm, Care Health Insurance. Religare's chair, Rashmi Saluja, has been resisting the Burmans' attempt to take over the company since the Dabur owners first showed interest in the financial services company in September 2023. Now with Gaekwad's sudden move, things might get even more tangled. India plans to tighten enforcement on third-party vehicle insurance by linking it to everyday vehicle-related activities. The Union Finance Ministry is considering measures such as mandatory insurance checks when buying fuel, obtaining fast tags, or renewing driving licenses and pollution control certificates. Subhash Narayan reports. This push comes amid concerns that over half of the vehicles that ply on Indian roads lack third-party insurance, despite the legal requirement under the Motor Vehicles Act 1988, which mandates such coverage and prescribes severe penalties for non-compliance. The proposed changes, which are still being finalized, aim to ensure that more vehicles are insured by integrating insurance checks with regular vehicle-related transactions. Motilal Oswal Group is considering selling its housing finance arm, Motilal Oswal Home Finance, which began as Aspire Home Finance Corp in 2014. Currently, the group holds a 97.49% stake in the subsidiary, which has a loan book of 4,098 crore rupees. Shine Ghosh reports that industry valuations suggest the unit could be worth between 3,612 to 5,031 crore rupees, based on its March-end net worth of rupees 1,290 crores. Despite initial asset quality issues, with gross non-performing assets peaking at 9.2% in FY19, the situation has improved significantly, with a gross NPA ratio of 0.86% as of March 2024. The union budget for FY26 is likely to significantly boost funding for R&D of high-yield hybrid seeds for essential crops like pulses, edible oils, and cotton to address shortages and reduce import dependency. This move aims to develop climate-resilient seed varieties to increase productivity and improve farmers' incomes. The planned increase in budget allocation reflects a broader effort to improve agricultural outputs amid challenges such as climate change. For instance, cotton imports are expected to rise by 42% this financial year due to falling imports and domestic production issues. Currently, funding for agricultural education is set to rise by 8% in FY25, emphasizing the government's focus on enhancing agricultural capabilities through education and research. Additionally, the government has initiated the release of 109 high-yield crop varieties expected to reach farmers in 3 years. That's all for today. Thank you for joining in. This is Nelson John signing off. I can't wait to be back tomorrow to bring you the next episode of Top of the Morning, back with the latest in business news. Until then, have a terrific day.